All right, everyone, welcome to the Risk-Free Projection live webinar. This is May 11th, and I'm just going to give you all a heads up. Right now, I am witnessing one of the most incredible sunsets out my window. I mean, it is absolutely breathtaking. And here in about 2 or 3 minutes, I may take about 10 seconds and get a photo. I mean, it is absolutely incredible. So I hope you all won't mind if I do that. Nonetheless, we're going to get started, and I'm also going to give you one hint with today's webinar. If you have already gone through some of the material about this program, I'm going to suggest that if you already know for certain you're going to move forward with the program, that you go ahead and do so. And the reason I say that is because in about halfway through this webinar, I'm going to reveal a couple of things that the first 100 that take advantage of the program starting from right now when this webinar starts, they're going to get something very special. So if you already know that you're going to do it, I would go ahead and do it. That's just a heads up. If you don't, obviously don't. So let's go ahead and get started. I'm going to start with this. And you'll hear this a lot. I talk about it a lot. Risk-free projection does not mean there is no risk. So if you even remotely think that that is what we're talking about, that is not what we're talking about. Risk-free projection does not mean there is no risk. And I'm going to show you that here in a minute. It simply means that if the option pricing metrics remain the same by the end of the trade, then the trade will not lose money. However, option pricing metrics can and do change during the life of the trade, and so there is risk. However, that risk is defined, and that risk is low with regard to this method. So the RFP status is more of an indication of the high probability associated with the trade, with this type of trade. So I label certain trades as an RFP status, and it just simply means that the projection is that the trade will not lose no matter what happens in the underlying market if the option pricing metrics remain the same. Okay, so in this webinar, here's what I'm going to cover in this webinar. Number one, I'm going to give you a brief history of my trading, and there's a very specific reason why I'm doing that. It's not to brag. It's not. I'm going to give you successes and failures, but it's for a very specific reason that I'll get to here in a second. Then I'm going to tell you what is included with the risk-free projection package, and I'll briefly go over that just so that you'll have an idea as I'm going over the next part of the webinar, which is what the risk-free projection strategy is, and then I'm going to give what your realistic expectations should be moving forward. Okay. Now, my statement here that I'm going to tell you is that this may be the most important trading webinar that you have or will ever attend. And I make that statement with context, and I'm going to make another statement a little bit later under that same context. And here's the context of why I make that statement. I took my first trade back in 1987, so I've been doing this a long time. And I lost money on that trade. I was 16 years old. And in losing money, I'm very competitive. It kind of hooked me, and I was determined to figure out what I needed to do to make money trading. When I was 19, I doubled an account. It was a small account, but I doubled it in about 1 month. And then it took me about 3 months to lose it all. All right. Then when I was 21, I turned a $10,000 account into over $23,000 in less than 4 months with a futures strategy that I developed. So yeah, that's that. I mean, when I was 16, I went after it, and so by the time I'm 21, I had already had a tremendous amount of experience trading, so much so that I created my own strategy in the futures market, and I traded that strategy, and I was applying compounding to that strategy. And that turned a $10,000 account into $23,000 in 4 months. And I remember this very vividly. Looking out my kitchen window, saying to myself, self, that's really impressive. Most money managers can't do that in a year or 2 years or even 3 years, and here you are, you've done it in 4 months. Pat myself on the back. I was 21, obviously, naive, and cocky. So I did that. Nonetheless, over the next 3 to 4 weeks, the account dropped to about $2,500. So I got a big taste of reality really fast. But, as painful as that was the starting point, really, behind my determination to really understand. Because up till that point, everything, all of my successes had turned to failures. So for 5 years, I would trade, have some success, and then fail ultimately, right? And that's when I really began my journey in figuring out what was required to succeed. And I'm telling you right now, what I concluded back then, and I still maintain today, is that it's not necessarily where you get in and get out. It's about trade size. That's everything. You don't have the right trade size, everything else doesn't matter. Because I had some really good strategies that I was trading, and because of my trade size, because I didn't understand proper trade size, those ended up not doing very well. Nonetheless, that's what I found. That's what I concluded. And over the next several years, I made it my mission to understand absolutely everything about trade size. So much so that at the age of 26, I signed a book deal with John Wiley & Sons on the topic of futures trading and money management. I was the youngest author to sign a book deal with them under those categories. I think it still is. At the age of 29, I stood in front of 200 traders speaking at an Omega World Conference where I guaranteed the profitability of a single trade over the next 90 days. Or if that trade was not profitable by a minimum amount of $800, I said to this group of 200 that I would reimburse the $800 they paid to Omega to attend the conference. And Omega, if you're not familiar with who Omega is, Omega was the original creators of TradeStation. That was before they went public, and I spoke at their conference. Nonetheless, 200 traders, I guaranteed a single trade, the profitability of a single trade. How idiotic was that? Well, I was on the hook for over $160,000 if that trade did not work out. Fortunately, it did work out. The trade made $2,500 within a couple of weeks, and I had a tremendous probability of success. I'll even tell you what the trade was. At the time, there was a very odd situation going on in the futures markets, in the energy markets, and heating oil was actually priced at a lower price per volume than crude oil. And heating oil is a derivative of crude oil. And normally, and when I say normally, like 99% of the time, heating oil is priced above crude oil. And it was not just inverted, it was inverted significantly. And so I said, hey, do this trade. Buy heating oil and sell crude oil on a spread. And if you don't make $800 on that within the next 90 days, I'll give you $100. I'll give you the $800 that you gave to Omega World. So I was on the hook for $160,000. That was the trade. I wouldn't guarantee that trade again because I'm older and not as naive. But it absolutely, I would take that trade every day and twice every day. Period. So it was a great trade. Nonetheless, the trade made $2,500 in a month. That kind of gives you an idea of how intent I was on finding great trades, good strategies, et cetera, et cetera. Nonetheless, when I was 30, I was planning on entering a live trading contest for the following year. And it was the most popular trading contest. It was live, actual account, real money, et cetera, et cetera. It was in front of the entire public, so they post results all the time. And it was late November that I decided that I was going to go ahead and enter this trading contest for the next year. And so I go in there and I start looking, and I saw that the first place trader for the current contest, so we're 11 months into the contest, and I saw that the first place trader was up only 50% and the third place trader was up only 35%. And I felt like if I entered that contest right then, with only a month to go, I could at least overtake third place. And so I did. I entered the contest with 11 months into it. I took my first trade on December 8th. The contest ended on December 31st. Now, everybody else has been in there for 11 months. I go in there, and by December 31st, I had increased the account to 42%, an increase of 42%, and I took third place. The following year, when I did actually enter that contest from the beginning, for several reasons, I was unable to take my first trade until about the second week of January. I took my first trade on January 17th in that public viewed contest, and in 72 days that account grew by 613%. And that was the fastest growth to 600% the contest had ever seen, and I believe that record still stands today. And it was a tremendous, tremendous run. And I'll tell you more about that here in a little bit. Nonetheless, a few years later, I began an option selling signal service. I had been focused on options. That was my first trade in 1987. Even though that wasn't my focus in the early 90s, in the mid 90s, late 90s, I became more and more focused on options. And then later, I began an option selling signal service in the futures market. And over the course of 5 years, that service maintained a 94% win rate. And one of the years never had a single losing trade. It was 54 trades and 54 winners. I had one client sent me his trade records. During that time period, it was only like a 2.5 year period, 2.5 years. That he had been trading, and he had taken those signals and turned a $50,000 account into $450,000 in just 2 years. And for a period of time, towards the end of that 5-year period, the number of opportunities seemed to dry up. This was in the futures market, and the risks became greater than they had been the previous year. And the very last year of that signal service, even though I still maintained about a 90% win rate, I was break even that year. So I began to turn my attention to Forex. And I had some really solid approaches in the Forex market, but through a series of events and revelations, that's what I'll call it, over the course of 3 or 4 years, I felt there were too many things outside of my control with that market, including brokers. In fact, one broker stole all the money from their clients' accounts, and I lost a ton of money that year. And it absolutely devastated me. They stole everything, and they're in jail today. That was back in 2008. I did go ahead and open up another account somewhere else, and I almost opened up another account where just a few months later, that broker ended up being investigated by the FBI and ended up stealing client accounts. So then there are other things like, for example, they take the other side of the trade. Forex brokers take the other side of the trade, and there was some definite finagling going on with that against me. There's a conflict of interest, and they had the ability to give themselves a little bit more of an edge at my expense. And then there was a few years back, there was a Swiss event that occurred, and maybe some of you know about this, but literally overnight, the Swiss franc dropped about 30%. And had you been long in that market, and about 2 or 3 days out of the week, I would have been long in that market. I wasn't during that trade, but you absolutely would have got slaughtered. I mean, you would have been absolutely slaughtered. So I ended up, about that same time, I ended up started changing my focus to weekly options because they had just been introduced. 2009 weekly options were introduced, but not the way they were in 2012, and it's a whole different game. What happened in 2012 is that they began offering weekly options, 6 concurrent weekly options all at once. And if you know anything about time decay and how time decay works, you know that most of the time decay drops during the last part of the life of an option. And so by having weekly options, if you know how to take advantage of it, you know how to take advantage of the most profitable time period for option sellers. So I began to look at weekly options because I knew this would begin to change the playing field, and it absolutely has. And over the past several years, I've had some really good experiences with weekly options, including doubling an account in 90 days, tripling an account in 4.5 months, things like that. I've had clients email me doubling and tripling accounts. But then last September, and I knew this was coming, and I told everybody it was coming eventually. It finally came last September. Wednesday weekly options were introduced in SPY. And with their introduction, never has the goal of experiencing serious exponential growth been more attainable for every single trader than it is right now. The playing field, if you know how to take advantage of it, there has never been an opportunity like there is right now with weekly options. And it's only going to get better in the future because eventually they're going to introduce Monday options, and then you're going to have even greater flexibility with putting the probabilities in your on your side. So that's a brief history. Obviously, I didn't go over everything that I've ever done, but that gives you a wide scope. I've traded a lot, and I've traded virtually every major market and every major strategy type that you can imagine. And over the years, I've produced over 150 hours of trading course material, and I'm probably being really conservative with that number on every trading topic you can imagine. And that includes Mission Million course, which is a money management course, which is dovetails off of my money management book and adds to it extensively. So there's that. And then there's a smart trading course. And that smart trading course was something that I produced back in the mid-90s, and that's where the trade came from in the heating oil, crude oil. That's what I called a smart trade. And so there's a long, about a 10-hour course on that. Then I had several courses on day trading the S&P, and the day trading the S&P is how I turned how I grew the contest account by 613% in just 72 days. It was through day trading the S&P and a strategy that I had developed doing that. And then I've done commodity spread trading in various times, in various ways, and had several courses on that over the years. I have a 12-hour course on options for profit, and it's more of a general options course on how to take advantage of time decay and limit your risk. I've done several courses on technical analysis, 20 hours worth of, and we're not talking about stuff you're going to pick up in a book. All the books, all the technical analysis books, they regurgitate the same thing, and it really bugs me. It bugged me then, it bugs me now. Technical analysis is not anything like what most technical trader gurus make it out to be. So I had 20 hours where I gave different information on technical analysis and then how to develop winning trading systems. I started off with System Writer, which was Omega's first program before Supercharts, before TradeStation. So I went from System Writer to Supercharts to TradeStation, and I developed a lot of trading strategies, had a lot of failures, had a lot of great successes, and ultimately learned a tremendous amount about that. So I did courses on that, the information you won't hear anywhere else. Then various technical trading approaches that apply all of this stuff. And then I've also done what's called breaking through. And I'm going to do that one again here pretty quickly, but it's overcoming self-destructive trading habits. I've learned a lot about myself. Over the last 30 years, I've learned a ton about other traders, and I know how we tick. I know the pitfalls that we go into, and that course, it doesn't sound like it would be, but I've actually had some comments from that course saying that it was absolutely by far the most impressive course in trading and most helpful course in trading they've ever gone through. And part of that is because I can give you strategies, I can give you approaches, but some of us, well, most of us, probably all of us, we have habits, and those habits tend to prevent us from being able to take advantage of what's out there. And if you don't take care of that, if you don't get rid of those things, those habits, then you have problems, right? It doesn't matter what you have. You can have the best strategy in the world, but if you're getting in your own way, it just doesn't matter, right? So it's very, very important. Just to give you an idea, comfort zones. I'll go through this really quick, but comfort zones. Here's something that I've heard over and over and over and over and over again. Some of you may even hold to this belief right now. I often hear, I like your strategy, I like the approach, I like the potential, et cetera, but I just don't feel comfortable with it, right? So I always, well, let me back up before I get to that part. When somebody says that to me, I usually respond with, let me tell you something, and you tell me whether this is true or not. The markets don't give a rip about what you're comfortable with or not. Would you agree with that? The markets don't give a rip what you think. They don't give a rip what you're comfortable with. So what I encourage traders to do is, instead of saying, hey, here's what my comfort is, and that's all I'm going to do, don't try and force your approach onto the markets. Instead, conform what you're comfortable with what works, right? And that's only a matter of time. It's only a matter of time. So I always ask traders, because most traders lose money on a consistent basis. Most traders never experience even one time a significant growth in their account, not even once. And so I ask them, let me ask you this, are you comfortable with losing? Because and the truth of it is that some traders are more comfortable losing a little bit here or a little bit there than risking a little more that gives them a much higher probability of success. They would rather be comfortable losing a little bit than uncomfortable learning how to conform their comforts to the market. So I encourage, that's a major roadblock that people run into. Then you have other areas that cause problems with traders. Like, for example, some of you have highly, highly successful careers. You have education out the wazoo. You've proven that you're a smart guy or gal. You're successful in whatever you're doing. And then you turn around and you think, you know what, because I'm smart and because I'm successful, I should automatically be successful in the markets. And that is absolutely the furthest thing from the truth. And we all have a tendency to think in that manner, right? So let me ask you this. If you're a successful heart surgeon, brain surgeon, you save lives, what you do is important. Are you going to get into the cockpit of an airplane and say, you know what, because I'm successful in brain surgery or heart surgery or whatever it is, I don't need to be trained in flying a plane? Of course not, right? But yet some of us approach, whether we do it consciously or not, some of us approach trading in that type of manner. And then there are others who will never be successful, ever. And I've told people this. I'm brutally honest with myself. I'm brutally honest with other traders. But other traders who blame everyone else for not succeeding, if it's never your fault, If you don't own what you do, you'll never be successful, because that means that you're also not learning. You go from one thing to the next, to the next, to the next. 3 months, you're not a millionaire, so that goes away and you're on to the next thing. 3 months later, you're not a millionaire, you go on to the next thing, and it's always somebody else's fault, and you don't realize, well, there's a pattern here, and that pattern is you, right? So I don't want to go give you the whole course. I just want to show you that I've been around for a long time, and I've seen everything you possibly see, and it is highly, highly, highly important for us to realize these things to be able to succeed. So, Proverbs 1:5 says, a wise man will hear and increase learning. You know what? I've been doing this for a long time, and I do not have everything. I am always, always trying to increase my understanding, to increase my knowledge, to increase my efficiency. And if that's the case, I've spent 50, 60 hours a week studying, trading, analyzing, you name it, for 30 years. And I'm still learning, right? So if you haven't spent that amount of time, then trust me, there's a lot more to learn, right? And Proverbs says a wise man hears and increases their learning. And then it goes on in Proverbs 12 to say, the way of a fool is right in his own eyes, but he who heeds counsel is wise. So, that's what I encourage people. Don't do those things, especially in trading, because it's very costly. And the reason I've gone through this history now, in my trading, a brief history, both failures and successes, and all the course material and the amount of time that I've spent, is because I want you to understand that when I say my risk-free projection approach combined with my money management strategy is by far the best overall trading opportunity I've ever seen or developed or traded, when taking into consideration the amount of risk, the potential reward, and the probability of success. So those three things, when I make that statement, it is not a statement that I make lightly or without a lot of experience. All right, now, granted, it's not because I've developed this, great strategy that, for 30 years was available. That's not at all the case. The reason that it is the best strategy that I've ever seen or developed is because never before has it been available. So it's the weekly option and the things that they provide, the weekly options provide you and I. That's why this is the best. It's not because all of a sudden I became brilliant. I'm just taking advantage of what is there, and that's why it is, right? So with weekly options, though, I'm going to tell you right now, you cannot expect to generate a 600% return in just 72 days, right? It's not a realistic expectation. I've done it before, but not in weekly options, and it's highly unlikely that I ever will, because the metrics associated with weekly options are just different. When I did that, it was day trading the S&P. And believe me, the metrics are different when you're day trading the S&P. You can make a lot of money fast, and you can also lose a lot of money fast. But nonetheless, you also can't expect to be able to even double an account every 90 days, which I've done with weekly options on several occasions, right? But you can't expect to do it every time or every 90 days or even most 90-day periods, right? So you have to realize what it is, what is available, and what you can do and can't do with the particular market. So it's not that this is the best strategy because you can do 600% in 72 days, because you can't, right? It's a whole different platform. But if you follow what I reveal in the 10-hour online risk-free projection course, by the way, I've probably done 25 hours at least on weekly option instruction, at least. And that doesn't include all the webinars I've done, and it's just a tremendous amount of material. Nonetheless, if you follow what I show you in that 10-hour course, you have a very high probability of being able to generate a small, low risk, and that's the key, weekly income that can grow exponentially over time through the money management with very little risk overall. So very little starting risk overall. So it's kind of the best of both worlds. You have low risk and you have the ability to compound it. So consider this. If you bought $5,000 of Netflix stock back in 2012 when it was trading at $8 a share and exited this year at $155, your $5,000 account grew to over $96,000. How many, just by a show of hands, how many did that? Yeah, me either. So let me ask you a question. If you didn't do that, have you ever bought a stock and seen it grow in that manner in 5 years? Most of us have not. And then even if you have, let me ask you this, can you repeat that often? And the answer is no. Of course it's not. However, it's just not a realistic, attainable goal for us to find these great stocks and then make a killing over the next 5 years. It's not going to happen. It's not realistic. However, if you generate low risk weekly income and you average over a 5-year period only $10 per week over that 5-year period and apply it to the compounding table that I provide you, that $5,000 can grow to around $38,800. Is that a realistic, attainable goal? $10 a week, non-compounded? Of course it is. At $20 a week, you're looking at $140,000 after 5 years is what that compounds to. Okay, that's tremendous, tremendous growth. So this makes it very, very clear what a trader's goal should be. I mean, we can go up to 100. If you can average $100 a week, non-compounded, over the course of 5 years, you're talking about just a ridiculous amount of compounding. And this has never been available before now in this manner because you just could not generate this kind of consistent income with such low risks before these weekly options made themselves available. So if you're able to average that $20 a week, if that's your first goal, and it should be, well, your first goal should be $10 and then increase that to $20 and then increase that, et cetera, et cetera. But if you can do that, you're talking about compounding to approximately $140,000 after 5 years, and that growth is more than had you bought Netflix stock back in 2012 for $8 and then sold it 5 years later for $155. So, this is absolutely tremendous. And just to show you the power of this, if you average $10, that's your first goal, and you achieve it, great. If you can increase that average to $20, you're looking at a $100,000 difference over a 5-year period with that difference being compounded. That is absolutely phenomenal. This is why I say your focus, every focus should be on this. So while the entire trading industry is infatuated with trying to pick the right stocks at the right time and taking on huge risks doing so, it becomes absolutely plainly obvious that your goal in trading first and foremost should be to do everything it takes to learn how to generate low-risk weekly income and then compound it. A, because the payoff is better than anything out there, the potential payoff. And B, because for the risk, it's even more so because the risk is very, very small if you follow the approach. So the goal of every trader on this call, if you listen to the recording of the webinar, absolutely, step one, generate at least an average of $10 a week in profits. And again, I'm saying this having traded virtually everything you can possibly imagine and then some in every major market out there over the past 30 years. I've seen just about everything. So this, given the platform that we have and the opportunity that we have, This should be your goal. Generate at least an average of $10 a week in profits. Step 2 is follow the compounding plan because that's really where the growth is at. And step 3, increase your weekly average income. And that's the process, right? So rinse and repeat. Rinse and repeat. If you get $10, if you're able to average $10 on a consistent basis, look to increase that to 20, to 30. And believe me, it is very, very realistic to be able to do that. All right, so here's what you get, and I'm going to give you this before I go on to why the probabilities are so heavily in our favor. I'm actually going to go through a trade. But the 50% discount ends tomorrow, or if you're listening to the recording today. Right, so here's what you get. First, you get a 10-hour online risk-free projection video course. And again, this course reveals everything you need to be able to do better, much better than $10 a week. I can't guarantee it, but this is trading, right? But the probabilities are heavily in your favor. So I liken this to if, there's a reason that the casinos spend so much money trying to get your money, get you into their casino. And it's because the probabilities are in their favor. Does that mean that with everybody that comes in that they lose money? No, there are some people that go into a casino and they make money, but the probability that doesn't change the probabilities, right? And what I'm trying to show you with this program is how to be the house with very little risk and then compound it. So that's what the 10-hour course provides. Plus, I'm going to give you the following bonuses at no extra charge. Number 1, 6-month subscription to the RFP Weekly Report. And that report comes out every Wednesday, and I sometimes do bonus reports over the weekend, and I've actually done a bonus report every weekend since starting it on February the 8th. You'll have access to all the back issues when you sign up, so you can go through every one of those back issues, and which will be very, very insightful for you. And I'll show you why here in a second. Then you get a 6-month subscription to the RFP monthly webinar. And that monthly webinar, I recap the trades. I add some tips and some nuggets that should help you to increase your efficiency. I look at the current conditions and make some suggestions. And then I answer every single question with regard to the approach that I get. So you have questions, you come on in that webinar, I will answer every single question that I get. Then you get a subscription to the RFP, the risk-free projection, double 90 signals. Okay, now I've done time warp double 90 signals before, and what this program is it's end-of-day daily signals. Right, so you log in to PDS Trader, you access signals on a daily basis at the end of the day. Right, so it's after the markets are closed, no market watching, but the signals are provided, and the goal is to double a $5,000 account in 90 days. That's the goal. Now, I'm not going to reach that goal every time that I do this, and so it's very, very important that you understand that I'm not saying we're going to double account. That's the goal. It is possible. Some things have to go really right for that to happen, but what I do is I say, look, if at the end of 90 days the account has not made $1,000, I will continue the signals until it does. All right? So I'll do the same thing. So you'll get a subscription to that. And the next one, it was actually going to start tomorrow, but I had to delay it, and it's probably not going to start until June 1st. So that'll give you time to go through the course before those signals start, and then we'll go from there. Then you'll get a 6-month subscription to PDS Trader. And PDS Trader is what I use to plan all the trades that you see, create all the risk graphs, the projection graphs, plan out the trades, et cetera, et cetera. So you get a 6-month subscription to that. It's a very powerful, very, very, very useful tool. And it's created specifically by me for this type of approach. So, and we're constantly making it better. And you basically get all of this. So the course alone is going to be $39.97. but I'm going to give you the course, and I'm going to give you all these bonuses absolutely free, no extra cost. You get everything for $19.97. Again, that ends tomorrow. However, one other thing, if you know that you're going to get into this program, starting right now, and I actually started it when I started the webinar, the 100 traders that get involved starting with at the beginning of the webinar, I'm going to increase your monthly subscription to the RFP Weekly Report to 12 months, and I'm going to increase your subscription to the RFP Monthly Webinar to 12 months, and the Mission Million Money Management video course I previously talked about, I'm going to give that to you at no charge. That's normal $997. So if you're one of the first 100 starting from the beginning of this webinar, you're going to get that. And later on, I'm going to tell you one other thing that you're going to get as well. All right, so that's what you get. Now let's talk about the risk-free projection and some of the importance with regard to the value of this program. As you'll recall, if you can go through this course, if you can generate $10 an hour, $10 a week right now, right, without doing anything else, if you then go through this course, and I can help you increase that by just $10 a month, or excuse me, a week, the course is worth $100,000 to you. If you're not generating any income through weekly options at all, then this course is worth a lot more, right? Because you can't even get out the door, right? So my question to you would be, you know, if that seems like a steep price, which it is not, but if it seems like it, my question to you is, what are you going to do with that $1,997 if you don't take advantage of this? Are you going to risk it in the market? What trade, what series of trades, what group of trades are going to have the potential payoff that this course and this program and everything that's involved in this program has for you? Nothing. I'll tell you right now, nothing, right? So let me ask you this. Would you spend $20 a week for $100, or excuse me, for 100 weeks to potentially make $538 a week for 260 weeks? Because that's what $140,000 averages out to be. After 5 years, if you get to just $20 a week on average during that 5-year period and compound it, you're talking about averaging $530 a week. And it's going to cost you $20 a week for $100 100 weeks is what it would cost, right? Less than 2 years. So there's that, right? And then I'll ask you this. In 5 years, are you going to remember what you spent $20 a week on for the next 2 years? No, you won't. So you will remember that you spent it on this, right? So there's that. So step one, let's talk about the program. Generate at least $10 a week in net profits. And since the RFP report started, and this slide is a little old, it's actually $185, but since the RFP weekly report started, the official trades have averaged over $200 a week over the course of 12 weeks. That's actually $185, right? However, over the last 2 weeks, the average has been negative $50. All right, so I am talking about averages. I'm not saying that you are guaranteed to make money every single week by any long shot of the imagination. I'm talking about over the course of 10, 12 weeks, see what you average, and then move forward. So this is something that has low risk, but you have to commit enough time, because there will be times where we have a few losses. And I'm going to show you all of the trades. The results of all of the trades from the RFP report. And that's where these trades have come from, the RFP report, the weekly report, which you will have a copy of. All right, so step one, generate at least $10 a week in net profits. Well, there's several substeps to that. And the first thing you need to do is go through the course. So you get the course, you get this program, you go through the course, you go through the reports, and there's been maybe 20 reports since I started in February on February the 8th. So you can go through those 20 reports. They're very, very insightful. Listen to the recorded webinars. So I've done 2 of those so far. Then take your first trade. Once you've gone through all of that, take your first trade, then analyze your first trade, and then take your second trade. All right, so step by step by step. And then 10 weeks after your first trade, so 10 weeks into your trading, analyze that. Those are the steps, all right? So break it down, very, very simple, very, very straightforward, and those are the steps. Now, why does the risk-free projection approach combined with the compounding give you the highest probability of achieving this substantial exponential growth? And the key is not what most people think it is. Most people think about the profits. They look at the profit potential first, and then and the risk second. Well, I'm telling you, I learned very early on that you need to look at the risk first. Risk, that's the key. If you understand the risk, if you properly manage the risk, if you properly prepare for the risk, then the profits and the success will eventually come. It's the reason most traders don't succeed is because they really don't know the risk. They don't understand the risks. They don't properly prepare for the risks. They don't survive. And a lot of that is shown by the fact that they overtrade. Right? And how many of us have ever overtraded? I've never overtraded. Wrong. Of course I've overtraded. In fact, I have to fight not to overtrade. Even now, I have to be very diligent in making sure that I don't get too or overconfident or cocky in the markets because I've been doing it for so long. Why would I need to be careful? Well, I tell you why I need to be careful, because the markets don't care about my education. They don't care about my history. They don't care about nothing. All right, so I have to conform to what works, and part of that is trade size. So risk is it. And if you read my book that I wrote 20 years ago, in it you'll see that I stated way back when that the lower the overall risk, the more powerful the compounding. So I'm always looking at the risk, right? Even if the profit potential is not that much greater, because if I can get my risk lower, then the compounding increases dramatically. So to give you an idea, $7,500 in non-compounded profits with the risk-free projection approach, which has an average max risk of about $100 per trade, and that's not absolute. It's an average max risk. Sometimes it's more, sometimes it's less. Nonetheless, that produces more compounded profits. That $7,500 in non-compounded profits produces more in compounded profits than a strategy that makes 50 grand in non-compounded profits but has an overall max expected drawdown of $10,000. All right, so the $50,000 non-compounded profits makes more money non-compounded, no question about it. But when you start compounding it, because you have to take into consideration the greater risk, it compounds slower. So the lower the risk, the faster it compounds, and that's what we aim for within the risk-free projection program. All right, so what I'm going to do to show you how low the risks are and why they exist, and not only that, but the probability of what the probability of realizing those risks are. So I'm going to go through a trade that came from the April 13th risk-free projection report. So after this webinar, when you sign up, you can go in and you can start looking at the past reports, and you can see exactly the trade that I'm talking about right now. So this is the trade that I said I was going to do in that report. I gave the trade exactly, and exactly what it was, exactly the entry price, how to place it, and exactly what I was going to do with it. Okay, so this is the trade. And the max projection shows, the max risk projection on this shows that it's less than about $40. And again, this is not a risk-free projection trade in and of itself from the beginning. There's actually projected risk on this trade, right? But what I tell people is you need to assume on these types of trades a max risk of around $100. Sometimes a little more, sometimes a little less, but you need to prepare for and assume that that's what's going to happen in case these projections are wrong, right? And again, if they're wrong, they can only be wrong by so much. So your risk is still going to be low, and it's still going to be absolutely capped. But that's the one drawback with this program, is that you don't know absolutely for certain exactly what your risk is on the trade, but you have a good idea of the range, right? So you'll notice here that max risk projection here is about $40. I tell people assume about $100. And then that's only at one point, right? That's and in this risk graph, the low point, and this is what I call a dead zone. Anytime you have a sag in the projection, I call it the dead zone. And the low point of this dead zone is at 236. So if the market closes within the risk range, which is about 2 points, as long as it doesn't close right at 236 on the day that this trade exits, then you should make less, or your loss would be less than what the max risk is, right? So your loss would be something less than what the max risk projection is, or what the max risk would be, all right? So here is something I want to point out to you with regard to this particular trade, okay? This is what I call the EMR, the equal movement ratio. And basically it says that if you see an equal move of 1 point to the upside and 1 point to the downside, what would you make on either movement? Or what would you lose on either movement, right? So on this particular trade, if the market made a 1 point move to the downside, the projected gain is at $80. If the market made a 1 point move up, and that should say up, not down, the projection is a loss of about $40, okay? So given a 50-50 probability over the next several days that the market will close either at 236 or 234, this gives you a 2-to-1 win-loss ratio, and statistically speaking, a 50-50 shot, a 50% shot. Would you make this trade? Well, I don't know why you wouldn't. The probabilities are in your favor, right? So that's the 1 point EMR, and the probabilities are in your favor. Well, if you look at the 2 point EMR, the move down, if it's a 2 point move down, the projection is $190 gain. Whereas if it's a 2 point move to the upside, the projected loss is only -10. Right? So that's an equal movement ratio, a 2 point equal movement ratio of 19-to-1 on the win-loss ratio. And again, these are projections. It's not exact, but you get the idea of why the probabilities on these trades are so high. And this is what I call my core trade. Okay, now the probabilities on this are in your favor. However, it is only the starting point. This is not the end. All right, this is the starting point. And truth be told, the market is going to close within this 2 point range, or either to the upside or to the downside, a majority of the time, right? Rarely are you going to see it make a huge move to the upside, which, by the way, the profit potential is unlimited if the market makes a huge move to the upside. And if the market makes a huge move to the downside, you have an absolute guaranteed minimum gain. And on this trade, it's $300. So the market can literally go to zero, and you'll make $300 on this trade. All right, so, but however, the probabilities are that the market's going to trade within this range. And so what I do is I use this as my starting point. And after my core trade is filled, I place 2 additional orders. And I'm giving you the logic of this program right now. All right, so after my core trade is filled, I place 2 additional orders. One that will be filled if the market moves up, and the other will be filled if the market moves down. So they're both placed, they're both working at the same time. Either the market moves up and fills one, or it moves down and fills the other, or it stays the same and doesn't fill either. All right, so that's what I do. So if the market moves up, there's order A, and if the market, moves down, there's order A, and if the market moves up, there's order B. So in order to take advantage of these trades, all you have to do is be able to place a core trade. It's a single order And you do it before the market opens, after the market closes, whenever you want to place the order, you can place the order. And then once that's filled, you place 2 other orders. I mean, that's literally the starting point, right? So if you can do that, you can do this strategy. Now, this shows the trade if the market moves up and my order B is filled. All right, so now I've improved the overall probabilities. I've pushed the risk to the upside, and my dead zone low point is at 237, and it actually is showing a break even at that point. Now there's still risk, right? This is not a guaranteed risk-free. This is a risk-free projection trade at this point, but it's not guaranteed no risk, because if the market moves up and volatility comes out of the longs, which it often does when the market moves up, especially when the market's close to all-time highs, which is exactly where it's at, then this might sag below zero. You know, maybe $10, $20, $30, maybe even $40. But the point is that you've decreased the risk significantly, and you've decreased the probability of realizing that risk significantly to the point where it's actually showing to be a risk-free projection trade. Now this is the order, assuming that the market doesn't move up and that order is not filled, but instead moves down and fills order A. Well, this is the new trade based on filling order A. So now I've created another, again, a risk-free projection trade with this by the market moving down. And this particular order was filled. All right, and you'll see that again in the April 13th order. So once that happens, right, either A or B order is filled, then you have one more order. And you place that order. And that order requires the market to move back up, right? So if the market continues moving down, you're going to net a profit. You're guaranteed at least a minimum gain of, you know, whatever it is. On every trade is different at a certain move to the downside. So this other order, so you'll make money if the market continues moving down, but this other order, if is going to require the market to move back up. And this is what happens if the market moves back up and fills that third order. So it's place the first order, that brings in a series of 2 other orders, and if either of those are hit, then you have a third order. And that's it. Right? So this creates a solid risk-free projection trade. You'll notice that now the low point of the dead zone is well above 236. The profit potential, if the market closes where it is about $70, and I'll still make money if the market moves down, and my my profit potential is still unlimited to the upside. So this is the process, and that's the strength of this program. It's the process, because you can use this process with any strategy. You don't have to start off with the core trade that I start off with. So based on where the market closed in this trade, because I was filled on that second order, this trade ended and netted $66. Okay, high probability of netting something, low risk, low probability of realizing any kind of significant risk whatsoever, all because of where I start and the process. So you create the core trade, then you enhance the core trade, and then you exit the trade. So it's a process that is literally that simple, and you could never do this with the same low risk, same high probability when weekly options did not exist. You just could not do it. You couldn't place on these kind of trades. You couldn't even come close. So this is why I say the opportunity here is just absolutely phenomenal. So this is a very logical, it's not magical, it's very logical. And most of you are going to get it very, very quickly. Some of you might take a little longer, but just keep exposing yourself to it, keep gaining experience. You will understand it. It's very logical, it's very straightforward, and you don't have to be exactly right to have a tremendous long-term probability of success. And if you have even just really small success, but you're compounding that, the probability of exponential growth is dramatic. Okay, and you don't have to be exactly right, And one of the things that I do in these webinars and in the reports is I show different ways of approaching it. Okay, so here's one way to approach it. Here's another way to approach it to achieve the same exact thing, right? But the point is that I don't know what's going to happen in the markets, right? So there's many ways to skin this cat. There's no absolute wrong answer as long as you follow the principles that I lay out in this course. So that same week, I took another trade that I had revealed in the report, and that particular trade produced $221 in profits through the same exact process. Right? So there are many ways to skin this cat. You're not going to be exactly right, but that's one of the reasons that the approach has such a high probability, is because of the probability that is associated with enhancing the trade. And what do I mean by that? Well, for one enhancement order, so either order A or order B, for one enhancement order to be filled based on the standard process, and you can actually increase the probability of this enhancement order being filled, which I go in detail in the course and in the reports and in the webinars. So I repeat this stuff over and over and over in different ways and different times so that it increases your understanding. But all that has to happen is for the market to either move up or down about 1 point from where you got filled at. And that's it. And then you can enhance the trade. Now, even within the enhancement, doesn't guarantee that you've created a risk-free trade. But you have, the purpose of the enhancement is to lower the risk and to lower the probability of the risk. And that is what happens. So what is the probability of the market over the course of 2 or 3 days moving either up or down 1 point from where you got in? And the answer is it's very, very high. Okay, now here's a trade that ended on Wednesday, yesterday. Okay, during the entire life of the trade, the market from high to low only moved a total of 1.2 points. And from high to low, based on where I got filled on this particular trade, the market moved, I think, 85 points to the downside and about 40 or 50 points to the upside. Yeah, about 35 points to the upside. So 85 points to the downside, 35 points to the upside. And that's it. So my standard process, my standard order A and order B, neither one of them got filled. And the market died. So when the market is dead like that, volatility comes out of the options. And again, this was not a risk-free projection from the beginning. It was projecting a risk. And by the time everything was said and done, because I was unable to enhance it at all, I took a loss of $94 on the trade. That's the worst loss I've taken since February 8th because we've seen the lowest market movement over the life of that trade during that 3-day period. So here is a graph of the average true range of SPY. And you can see what the average is. It's well above 1 point on a daily basis. Forget about 3 days. This was a 3-day period where the market did not move more than $1.20 from high to low. All right, so this is the average. This is a 9-day average based on a daily true range. And the daily true range, as you can see, normally averages above $1.25 to $1.50. If I were to increase that to the average 3-day range, you're looking at about 2.5 to 3 points. And all I need is either up or down 1 point. So we have a very high probability of being able to enhance the trade, diminish the risk, and decrease the probability that that risk will occur. And this is what happens when you're able to go through this process. Here is the performance report since the risk-free projection weekly report started. And you can see here that over the last couple of weeks, that's when the market died. I haven't really been able to do much. So on the May 1st trade, well, we'll start with April 27th. The April 27th trade didn't make very much at all because the market didn't move very much. Far under the average range. The May 1st trade lost $5. I was able to enhance the trade. However, not enough to create a risk-free. So I did lose $55. I was able to diminish the risk, obviously, and then the May 10th trade, I was unable to enhance the trade at all. So that's where we'll suffer the risk. Now, in these reports, I actually show you ways to invert this so that the risk is either a limited risk is either much lower, the market has to move much lower, or much higher, and then you can start the process from there. So there's, again, more than one way to skin this cat, but this is my preferred way because I believe it gives the most probability for larger wins. And this average, even with the last couple of weeks not doing hardly anything, it's the average is at $185 a week. All right. So again, this is why I say you can't guarantee anything, because who knows? Maybe the market dies and doesn't move a point over a course of 3 days for the next 3 months, and you suffer a little bit of loss, some smaller losses here, some smaller gains here and there. But the probability is that that's not going to be the case. The long-term history, you've never seen it do that for that long and to that degree, and even then there are chances to lower the probability. So if you average only $100 during the positive weeks, so let's dumb down this return, this performance. If on every week where I made more than $100, let's say you only made $100 during those weeks, and for every week that I lost, even though I haven't seen a $100 loss in any of the report trades yet. It'll come, trust me, eventually. But let's say you instead lost $100 on every one of those 3 weeks where the report trade lost, and you only made $100 during the good weeks, and then during the weeks where the gain was smaller than $100, you didn't make anything. Using those stats, you still averaged $50 a week over the last 12 weeks. All right, so there's a lot of room here for error. There's a lot of room for mistakes. There's a lot of room for learning, et cetera, et cetera, et cetera. All right, so it's the low maximum risk. This is why the probabilities are so high and why this is worth making this your primary focus, because the low maximum risk and the low probability of realizing that maximum risk. All right, so what should you expect when you start? Let's get into realistic expectations. You're brand new to this. What should you expect? Well, number one, expect and plan for a $1,000 drawdown, non-compounded. All right? So I say start with a $5,000 account. The risk is actually much less unless you make some really, really bad mistakes. Like, for example, leave yourself naked short an option, which we never do, but you mistakenly leave yourself naked short an option, and then the market tanks the following day, and you end up losing a lot. You don't want to ever do that, right? So there are certain mistakes that you just absolutely do not want to do, and they're easily avoidable. But nonetheless, expect and plan for a $1,000 drawdown. Now, very low probability that you follow the program, you follow the principles, you follow the process. Very low probability that you're going to realize that drawdown, but you need to prepare for it and plan for it anyway, because if you start off, and let's say you make a small mistake, or you end up losing a couple $100 over a couple of weeks on your first several trades, you don't want to sit there and say, okay, well, I'm down $200. The reports have never seen a 2-week period down $200, so I'm not going to trade anymore. Well, that's a recipe for disaster right there. Right? It's because you didn't prepare for the risk. Remember what I said before? That's one of the biggest problems that traders face, is they are ill prepared for the risk. They don't commit based on what the realistic risk is. So I say expect and plan for a $1,000 drawdown non-compounded. That would equal 10 losses in a row at $100 a piece. That's what that's equivalent to. Now, based on everything that I just showed you, if you follow that, what do you think the probability of that occurring is? It's very, very small, right? In fact, I'm going to tell you right now, in my Time Warp Double 90 program, and I've done 5 of them, so not the risk-free projection double 90, but my normal time warp double 90, I'm generally risking on a per trade basis in that program about $250 to $300 on every single trade. And I'm focusing more on bigger gains if the market makes a small to medium-sized move to the downside. So I have a bearish slant in that program. Okay, so last year I did 3 of them, and last year during one of the most bullish markets the stocks have ever seen in history. And I never went into, none of those 3 programs went into $1,000 drawdown on any of them. And the risk on this is much lower, right? So the probability, again, of you realizing that is small, but you have to plan for it and prepare for it. Number 2, expect 3 months to get really comfortable with the approach. Don't expect to understand everything the first week. Don't expect to understand everything after you go through the course once. Okay, go through the course, go through the reports, attend the webinars, go through the past webinars. Give yourself 3 months. Believe me, the more you expose yourself to it, the more comfortable you're going to become. Number 3, do not expect to make money every week, as I've already demonstrated. I've never said that. I'm talking about your goal is to average a small weekly gain. That does not mean you're going to make money every week. That's not the case. The risk is very low every week, but you're not going to make money every week, period. Not going to happen. Number 4, do not ever expect to hit a hole-in-one trade. Now, what does that represent? A hole-in-one trade represents what? Perfection, right? Well, guess what? You're never, ever, ever, ever going to pick the highs and lows of a market. You're never going to place the right orders. And you know, if you follow me, I have a very standard, through the report, I have a very standard process that I go through. And sometimes I'm just barely off. Like, for example, yesterday's trade. I actually placed an enhancement trade and placed that trade and it actually traded at my price, but I was not filled. Right? So that's how close I was, even though the market was dead, that's how close I was to getting filled on a trade that would have enhanced it and dropped my risk by about $50. All right, so there are going to be those times where the market almost gets, you know, filled on one of these enhancement orders, but then it doesn't. But you don't have to, because the probabilities are strongly in your favor. So don't expect to hit these hole-in-ones. And I think one of the problems that we as traders try to do is we try to hit these hole-in-ones. We try to be perfect. We try perfection. It's impossible. You can't do it. You'll never know exactly where the market is going to go, so you cannot make those calls, right? So those are the 4 things that I would say that's what you expect to begin with. Now, given those expectations, here is what you do. Number 1, again, you go through the course. So you get involved in the course, you go through it. Number 2, you go through the reports. Number 3, you listen to the recorded webinars. There's a lot of great stuff in all of that. Number 4, you take your first trade. You analyze that trade, make sure that you followed the process, followed the logic, followed the principles, and then you take your second trade. And then 10 weeks after you take your first trade, you analyze. And if you achieved an average of $10 a week, consider it a success. And the next step is to improve that weekly risk. All right, so very, very important. If you achieved, then you go through the process again, right? So following 10 weeks, you go through the same thing, you go through the course again, go through the reports, go through the recorded webinars, analyze your trades, take another trade, take another trade, take another trade. 10 weeks after this, analyze it. If you've achieved $20 a week, consider it a success and move to the next step. You improve, right? Those are what you should realistically be expecting, not to be making $185 every week on these trades, right? Even though I fully reveal almost exactly what I do, there are just small nuances every now and again in the report, but I'll mention them, right? So I give you almost exactly what to do on these trades, or what I'm going to be doing, I should say. And And so if you follow those, obviously you are giving yourself a little bit greater probability. So given all those, and given the low probability of realizing that drawdown, here's what I want you to do. If you go into a $500 drawdown from the start, meaning non-compounded, and you're following the process, okay, if you go gunslinger on me, and you're doing all these other things, you're trading large trade size, which you should not do at the beginning. I don't care how big your account is. Make it prove itself. There's plenty of growth with the money management, but stop trading, and then send me your trades. Okay. So why do I want you to send me your trades? Well, here, this is that one other thing that I said. The first 100 traders starting from the time that this webinar started who sign up, I will give you a 30-minute one-on-one phone lesson if you ever go into a $500 drawdown using this method. I'll give you a one-on-one 30-minute phone lesson. I'll look at your trades, I'll analyze what you've done, and we'll talk. I don't do that. Who does that in the industry? I mean, so everything in this program, you could go and you could spend, and many of you have $2,000, $3,000, $4,000, $5,000 on a 2-day workshop somewhere. You leave, you got a lot of information, and you never hear from them again. Right? You have no follow-up, no support, you have no nothing. That's why I include the signals, the report, the webinars, and if all of that isn't enough and you go into a $500 drawdown, I will personally give you a one-on-one 30-minute phone lesson to see if we can't right the ship. And if that doesn't work, at the end of 6 months, if you're not making money, you can get a refund. Right? So I don't know what else I can do to convey to you how important this approach is and how committed I am to see as many people succeed with it as I possibly can. So again, if you right now know that you're going to take advantage of this program, you need to do it now, because as soon as we hit 100, and there were 700 people that registered for this webinar, and I only sent out an email about it yesterday for the first time. And so once that 100 is gone, I'm not going to make that commitment to people that come in after that. So if you know you're going to take advantage of it, don't wait till tomorrow, don't wait till later, do it now, so you make sure that you're in that 100 that gets the additional bonuses. So my question to you is, given what you have seen in this webinar, do you think this approach will give you the knowledge, understanding, and process enabling you to achieve an average of at least $20 a week in non-compounded profits while keeping your overall risks low? Do you think that this program has a legitimate shot of doing that? Either the answer is yes or no. And if it's yes, then this program isn't worth $2,000. Right? This program is worth $140,000 or more because of the compounding aspect of it, because of the low risk combination of being able to efficiently compound. It's tremendous value. So that's your answer. I mean, literally, that is your answer. So again, here's a recap. Starting at the beginning of this webinar, first 100 traders. I'm not only, if you're in that first 100 group, you get everything, but I'm going to increase the subscription to 12 months on the RFP weekly report. I'm going to increase the subscription to the monthly report to 12 months. And then I'm going to give you the Mission Million Money Management 10-hour online course at no cost. And I'm going to give you the conditional 30-minute one-on-one phone lesson if things aren't working out for you. So if you're serious about trading, either now or in the near time future, maybe it's not even a year from now, you don't want to wait to get into this program, because all of this goes away tomorrow. When it's done tomorrow, you're going to pay a lot more. All right, so hopefully this was an informative webinar, and so what I'm going to do is I'm going to go ahead and take some time to give some answer some questions here. And I appreciate your patience. I know it was a lot of information, but I wanted to make sure I gave as much as I possibly could. First question, what about commissions? Well, I have two things about commissions. Number one, you absolutely need to have low commissions, right? They're not much. There's not a lot of trades here, but the commissions will make a difference. I pay less than $1 at IB, and then there's also, I have a relationship with Tradier Brokerage, and Tradier Brokerage will give you unlimited trading for $50. Okay, unlimited trading for $50 a month. So commissions should absolutely not be an issue. All right. All right. And I do a lot of trading at IB, and I do a lot of trading at IB, a lot of trading at Tradier. So either or, I pay a little bit of commission at IB, but at Tradier, I'll also mention that I'm creating a trading platform specifically tailored to help traders trade this process, and it's only available at Tradier. Hopefully that will be out in the next few months, and you'll get a temporary complimentary copy of that, by the way. All right. Do I actually have the cash to cover the $160K refund if the trade did not work out? I did, fortunately, but it would have, back then it would have strapped me a little bit. Is there a formula we can use to know what trade size we should use for the account balance we have on hand? Tony, I cover that in the course. All right, so yes, and by the way, this course is brand new. It's so brand new that I have not even uploaded the last 3 lessons yet. Those will be uploaded within the next week. All right, you have everything you need to start trading. The last 3 lessons are kind of an overall summary wrap up, and then I talk about money management in one of the lessons as well. All right, so you taught yourself all this, or did you have a mentor? No, I never had a single mentor. As a matter of fact, I was so distraught over what everybody was telling me to do and over the success or the lack thereof that I decided that I would never listen to anyone again, and I would figure it out on my own. And I did that in the early 90s, mid-90s. And so everything that you see here, you'll never see anywhere else, or at least not unless they copy me. So it's all original. The money management I created, this approach I created, et cetera, et cetera. Obviously, I didn't create options. I didn't create money management itself. I just created the specific strategies for taking advantage of them. All right, let me scroll down here. PFG Best. That's with regard to the Forex. I almost opened at PFG Best, but it was one world that I lost all the money at. What about Thinkorswim? You can use Thinkorswim. You can use TradeStation. I don't, so I really can't comment on them. All right, let's see here. I signed up for your service, but I was not able to understand your weekly report. You give a trade, and then you give all sorts of other trades, which you should make during the week. You should just give a trade and then send out revisions. All right, so Tony, I'm assuming you saw one of the first ones, and I'll just tell everybody this. When I first started, one of the things I wanted to show everybody was that there's more than one way to skin this cat. There are so many opportunities of how to take advantage of this, and I was kind of just giving a bunch. I got some feedback from the subscribers, and I've since narrowed it down, and I basically have 1 or 2 trades that I focus on to make it as simple as possible, and then I change those up a little bit, so I may do a little bit different variation the following week, as opposed to giving you all of these different variations the same week. All right, so can you do this on a Roth IRA? Yes. It sounds like you are talking about scalping and compounding. No. You mean in the S&P? No, that was not scalping by any long shot of the imagination, but it was day trading. About 1 trade a day. Trade would last, on average, about an hour. Nonetheless, that's neither here nor there. Is your course a take us by the hand and show us how to do it? I showed you what the course is. You can decide whether it's enough to take you by the hand or not. Let's see. The problem is most of the time SPY either goes sideways or up a little bit every week, and this strategy doesn't make money in that climate. No, Anthony, you probably left before I got to the part where we actually enhance the trade, and that's why. So if the market goes, so the market might move. Well, I'll give you an example. Today, in time warp program, not a risk-free trade, but a different time warp trade, similar type trade, where I was risking about $200. Market moved down about $1.50 today. I ended up and then back up, but because of the process, can be applied to any trade almost. I went from risking about $200 on that trade to a projection of no matter where the market goes, making at least $100 on the trade. And yet the market moved right back up to where it was when I got in. Right, so that's the beauty of the process. Do you need to be trading the market live? The answer is no. If you can make some, if you can get notified during the day of a trade getting filled, and then you can place another order, it'll be more efficient. But the risk-free projection 90-day signal program, none of that has anything to do with intraday. I actually provide advice, or not advice, but suggestions for people who have the ability to watch the market, but the signals are based on not watching the market during the day. Tony, no, I hate PayPal. Let's see. Do you need to watch this if you already? Well, that's up to you. Let's see here. Just scrolling through some of these trades. I've already answered some of them. Will your system trade return $500 per week with $5,000 account? No, not without the compounding. Not even close. Only the compounding gets you to that kind of growth. I've received 10 free webinars this week suggesting that they are the Holy Grail. I've continued to lose money with each one. What makes me different? Well, A, if you even remotely thought that I said this was the Holy Grail, you completely made that up in your head. I did not say this was the Holy Grail. There is no Holy Grail, right? So I showed you, I believe, why this is different, and if that's not good enough, I'm not going to, it doesn't change what I do and doesn't change what I have done or will do in the future. Do you have any trade copier service? No, I don't. I've considered it. We'll see in the future. I make no promises on that. Can you review how you choose a trade, set it up, and place the trade so I can see the process to go through? No, I did that. I do that many times over in the reports. So hopefully, this question looked like it was fairly early on. So hopefully I did that enough for you that that satisfied what you were looking for there. Harry, I'm not going to repeat your question, but the answer is yes. Contact support. Say Ryan said do this, and they'll do that for you. And I will hold your spot. Okay? Previous course customer, where should I log into to retrieve my course training webinars? PDS Trader. Log into PDS Trader. Let's see. Mark, I will be sending out an email on that tomorrow. I'm not going to repeat that question, but I will be sending out an email on that tomorrow. What is the max risk if IV drops? I show you the max, how to determine the absolute max risk on any given trade if the IV drops. But generally, on the worst case scenario, you're looking at about $140 And that's pretty much going to be, again, you know, it's around $100 max. I mean, if the volatility really tanks and you're not able to do anything with the trade, you might lose $140 on trade. And there are some types of trades that have a higher probability of seeing that increase. But I go through all of that in the course, so you can avoid those. The recording will be available tomorrow. When you talk about 10-week, do you mean we are also trading one contract star? So there's more than one contract on a per spread, right? So you might do, it's a spread trading, obviously. But nonetheless, you start with the minimum trade size and then you increase as your account grows. So you just follow the compounding table that I fully explain, fully reveal in the course. How many subscribers do I have to the report? I assume you're asking. I have around 400. Let's see. Points is 1.00. All right, so 1.01 would be 1.1 cent. What is the average buying power reduction required to place this trade? Very low. The required capital to place this trade is, in most cases, less than $200. Are these results just having one position at a time? Yes, Pete, that is correct. The minimum trade size, those results were based on the minimum trade size. All right, and I give those trade size in there. It does not include commissions because they can be taken at Tradier, and if you sign up there, it's a unlimited free commission. There's no commissions. Unlimited trading, no commissions. You have to go through PDS Trader, sign up through PDS Trader. It's only through my relationship with Tradier that you can get that deal. These assumptions regarding trading a single account or single contract, yes, again, minimum trade size. Can this be used with the SPY or can other ETFs be used? Yes, it can be used with other ETFs. You have to be very careful with some. I focus everything on SPY because it has the highest volume, the lowest bid ask. So my suggestion is you don't move into other markets until you are really comfortable with doing it in SPY. All right, let's see here. Continue to scroll through here. Let me see here. Man, a lot of these I've already answered, so. What is the link to sign up for the program? Look in one of the emails. You'll see the link to sign up in the program. So if you got the email for the webinar, the link to sign up is probably at the bottom. So there's two links in the emails. One or two for the webinar and then one to sign up for the program. Let's see here. James, if you're already a subscriber to PDS Trader, the 6 months will be added on to the end of your subscription, to your current subscription. So that is correct. Can you trade in the SPX rather than SPY? Yes, I've done it. I've done it a lot, and I get better fills consistently in SPY. So it's actually worth it to do it in SPY. What approach? What approach? I did not get what strategy I'm going to use with this course. That's what the course provides. The course provides the very specific approach and the money management. The website, I don't have the website link for Tradier. Go to PDS Trader and use the link on PDS Trader because that's the only way you can get the deal anyway. Okay. Do your initial position start out as a spread? Yes, everything starts out as a spread. I don't do anything naked with regard to this approach. The recording, again, will be available tomorrow. I already answered that. You don't, again, Steve, you don't need to watch the market during the day, but if you have a way to be notified if you're filled and then can place another order, you can be more efficient. And again, Trade Partner, which is a trading platform that I'm creating right now, will actually allow you to do this without, be more efficient without watching the market. And again, you'll get that'll be hooked up to Tradeer. You'll get a complimentary temporary subscription to that once it is released. Let's see, can all of these trades, including trades A, B, and C, be done in the evenings as I work during the day? James, again, that's if you're filled during the day on the core trade, you can place the orders A and B for the following day, but if you can do it sooner, you can be more efficient. Again, the signals for the RFP 90-day program are all end of day, so you don't have, so just to prove that you don't have to still be successful with this approach. Let's see here. The report gives specific trades that I'm going to be taking, and the signals give exact trades that I'm going to be taking on a daily basis. And again, no market watching required for those signals. If you have 5K and make $10 the first week, how do you compound that? You don't. You're asking a very complicated question that has a simple answer once you learn the strategy, the compounding strategy, which is fully revealed in there. So you're not going to compound based on a $10, one $10 week. Okay, so in fact, you're not going to begin the compounding process until you've netted $100, and that's when you start the compounding process. Is the RFP the same as one-two punch strategy? No, Matt. It is one-two punch strategy on steroids. How's that for an explanation? Lewis, no, this is not available to you for free, but I will give you credit. And in fact, you had an opportunity to get that credit earlier. That has come and gone, but I'll contact support, let them know, and you'll get $1,000 credit. Okay. Is the 27% weekly option strategy still good? Yes, it is, but it's not at all as efficient as that. The 27% weekly option strategy is an introduction into this overall approach to trading weekly options. So again, this is that on steroids. Thank you for that comment. Appreciate it. Let's see, continuing to scroll through here. Will we find and be filled on these trades every week? No, Bruce, you will not be filled on a trade every single week. If you'll notice the, now, well, let me go back up here and let me just throw this up here real quick. Whoops. All right, there we go. You'll notice there are gaps. Like February 24th to March 8th, there was a 2-week gap there. We weren't filled on anything. And then April 12th to April 20th, that's a full week, not filled on anything. May 1st to May 10th, we weren't filled on anything in the previous week. Right? So you're not going to be filled on everything. There are numerous opportunities. It's just a matter of how badly you want to get in and how aggressive you want to be with the approach. RFP is different than Time Warp 90. Time Warp Double 90, yes. Lou, yeah, go to your email and there should be a link in that email to sign up. I already answered that question. So PDS Trader is an option trading tool that you can analyze trades, you can put together trades, you can plan out trades. So all the projection graphs that you saw were all used with PDS Trader. PDS Trader is also where you'll access the signals, and there's a lot of other stuff in there. It's free with this program, 6 months, so you'll have plenty of time at no extra cost to evaluate it and just see how valuable it is. I use it. Sometimes I have as many as 10, 12, 15 instances of PDS Trader open on my computer all at once. That's how much I use it. I mean, it's just a tremendous program. Let's see. Steve, yes. Do we get any type of software to help calculate the trades? That is PDS Trader, and it's an online tool. The webinar price is $19.97, so you don't pay $39.97. But again, if you're in one of the first 100, then you get all of those extra bonuses. You get extensions on the subscriptions listed here. You get the extra course, and you get, if this is just not working out for you, you get a 30-minute one-on-one lesson with me. How do I avoid the day trading rule? Well, you don't have to enter and exit trades at the same time. Number one. Number two, there are other ways to avoid it that I explain in the program, but it's very easily avoided. I don't want to get into the technicals on this, but let's see. At 10-to-1 SPY versus SPX, yes. If you trade this on SPX to begin with, you are talking about 10 times the risk, so don't do it. Make your account and your success prove itself before you increase your risk. Okay? I promise you that's the right way to go. All right, let's see. Alex, it depends on how long of a subscriber you are. So if you're a 6-month subscriber, you'll have a 6 months added to your subscription. Okay. An RFP double 90 signal is this approach. Right? So I'm giving you a signal with this approach. That's what that is. And then I'm telling you the process of what I'm going to do on a daily basis at the end of day. No market watching. You place the first order on the first day. At the end of the day, I update it and I tell you what to do the next day. Or I tell you what I'm going to do the next day. All right, so is there a way to just pay monthly fee instead of Matt, email me on that. How long am I typically in a trade? 2 to 3 days. You can take longer trades, but I find that it's just more efficient to be in shorter term trades. Do you think getting the RFP in lieu of PDS Trader is the way to go? Matt, you get PDS Trader with RFP, so it's definitely the way to go. You're not going to get this in PDS Trader. If you subscribe to just PDS Trader, you don't get any instruction like this. You get limited instruction, but nothing like this. John, the 185 was shown on the list, so you can add those up, and it includes the losses, and it includes weeks where there were no trades. So it's 12 weeks, right, from start to finish. February, basically first week of February to now, the first week of May is 12 weeks. Add all that up, divide it by 12, and you get 185. Okay. All right. Looks like And again, as I stated, you cannot expect to come out of the gate and achieve that. All right, maybe you will. Maybe you follow the report to the T. You'll get everything. You'll understand everything, and we have a good run. And that might be the case, right? So, but you can't expect that. It's especially at as you're learning this at the beginning. Like I said, don't expect anything more than an average of $10 a week. And if you fail at that, keep at it. Analyze. Did you fail because of mistakes that you made? Did you fail because you weren't following the process? Or was the failure because the market conditions just, were not very good? And that's, if that's the case, you just keep on because the probabilities are in your favor. And the risk is so low, you just, absolutely. Lou, yes, I will confirm that you are in the first 100. So, you bet. All right, let's see here. Do you also help us pick the right 6 numbers in Powerball? For an extra $100 a month, Tony, I will do that. No. I don't gamble, ever. If I go to Vegas to speak, I don't so much as put a nickel in the slot machine. I hate gambling. I hate losing. I hate it. So, yeah. Let's see. Are the bonuses offered here on this webinar now the same as the bonuses if I register with the web page? Yes. So the bonuses that I mentioned here are not published on that web page. So we have a timestamp on everybody's order, and everything that you saw here is not on the sign-up page because it's not being offered to everybody else, right? And you have to be one of the first 100. So yes, even though it's not there, you still register with that page, and you'll get all the bonuses and the additions. Let's see. Where are the reports shown on the website? They should be under RFP reports. So look in the signals section, okay, and look at the RFP. It's called RFP Weekly Report Signal. It's in the signal section. Click on that. If you don't see that, contact support, and they will make sure that they get that turned on for you. Okay. Support at quantumcharts.com. Support at quantumcharts.com. Or you can go on the website and click on live chat during market hours. Michael, the answer is yes. I don't, even if you get a credit because you just signed up for something else, if you upgrade to the RFP, you will still get all of the bonuses. So absolutely, I will make sure that your spot is held. Again, contact support, and they'll check to see what that credit would be, and then give you a link for that. And let them know that I said I would hold your spot. Do I publish the RFP double 90 signals in the same place as the RFP weekly report signals? No, it's a different signal subscription, but it will be clearly labeled. And again, that hasn't started yet. It will start probably the 1st of June. You are welcome, Michael. You won't, unfortunately, be able to replay this until the morning, Gil. So if you... Yeah, in the morning. You'll get a link. I will send out an email. There'll be a couple of emails to make sure no one misses it, and you'll get the link in tomorrow morning's email. Okay. All right. What is the ongoing fee beyond the offer as it stands? So if you need the signals, an RFP double 90 signal subscription. It's a 90-day program. Again, I guarantee that the signals will produce $1,000 in non-compounding gains during that 90-day period. Or let me rephrase that. $1,000 net, and I include the compounding within the program, or I continue the signals until it does reach that level. So if for any reason I don't reach that level with those signals, then I'll continue on until I do. So that's 90 days. The RFP monthly report, it's $97 a month. The monthly webinar, that's also $97 a month outside of this. But I give it to you long enough to where you probably won't need it, and if you do, or if you still want it, you should be making more than enough money to pay for it, right? So let's see here. John, thank you. I appreciate it. That is an excellent, excellent, excellent question. And I'm not going to lie. I'm going to be brutally honest here. There are going to be some people who go into a $500 drawdown for whatever reason, and then I have a phone call with them, and hopefully we'll turn it around. But then there will be others that will still not make money with this program. They won't get it. I mean, it's very logical, but again, there's some traders out there that just refuse to do what it takes, and their ego gets in the way. They aren't committed to it, whatever the case is. That's why, as long as you're serious about this, if you take the trades if you take at least 2 trades a month, that's all I require, just 2 trades a month. Once you start for 6 months and you're not making money at the end of 6 months and you don't think it's worth it, I'll give you a refund, right? But I'm going to do everything I can to make sure that you benefit from this, because the potential is just too great. All right, let's see. So I'm just reading the question. Randy, I will. Shoot me an email and I will do that. All right. The trading platform, there is no, you won't find it anywhere. It's not been released yet, but it's called Trade Partner, and named aptly so, because it is literally designed to be like an order placing partner. So let me give you just a really quick synopsis of what this thing does. You place an order and you set it up in Trade Partner that says, if order A is filled, then place order B, and it will do it automatically for you. You don't have to be in front of the screen. You don't have to be watching anything. It's not notifying you to place an order. It's actually then placing that order as soon as order A is filled. And it will do that almost endlessly. You can literally string together 10, 12, 15 orders if you want. If A is filled, then B. If B is filled, then C. If C is filled but B is not, then cancel C or cancel A. I mean, it's simple, but what it allows you to do is just absolutely crazy cool. It's quite a bit of work on my programmer's part to do this. We're almost there. But man, it is going to be a great, 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 great partner for this program. Talk about stress. So man, that's a good question. I kid you not, this is the least amount of stress I have ever had in my 30 years of trading. Okay, not because I'm going to make money every week, not because I'm guaranteed to do anything, but because I know the probabilities of market movement and I know the probabilities of what I'm doing. The risk is absolutely limited, and I don't have to watch the market. Okay, again, if you do watch the market, or if you can be notified, you can be more efficient, And I do that a lot, but I don't have to. If I need to take a day off, like tomorrow, I'm taking a day off tomorrow. I don't need to be watching the market. I can place my orders, and they either get filled or they don't, right? So hopefully that helps. All right, Ryan, I signed up on May 8th for 1 year. John, contact support. Let them know. Let's see. Just making sure I read this question right. Let's see. Okay, so if you previously signed up, yes, all of these bonuses. So if you signed up 3 days ago, all of these bonuses you get automatically. All right. So I'm ending these bonuses once the webinar started at 100. That's where the bonuses end. If you're talking about you signed up for PDS Trader for 6 months, or excuse me, for a year, if you signed up for PDS Trader for a year as its own, contact support, let them know I said you'll get credit, and they'll send you a link and give you that credit for the RFP, for this RFP program, and I will make sure that you are included as one of the 100 here. So that, hopefully that. Oh, Randy, thank you. Email me, ryan@quantumcharts.com. ryan@quantumcharts.com. You can also email support, but do not copy me on the same email. Email two different, and I won't go into why you should do that. But if you copy me on a support email, I'm not going to get it. All right, so make sure you email me only, and then email support separately. Let's see, when does it come out? Well, I was hoping it was going to, and you're talking about PDS Trader, I was hoping it was going to come out about 3 months ago. So I don't want to make any promises. I'm going to say a very, 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 very high probability within the next 3 months. How's that? Once you start multiple contracts, how often do you get partial fills, and what volume does that usually start happening? I have not. We're not trying to pick the bottom. Rarely do I pick the absolute best spread price. Rarely do I pick the absolute lowest price to get into, an enhancement, or the highest price to get into an enhancement. I trade, large lots, very large lots, and I generally don't have a problem. And everybody, once you get into this, you're gonna realize you don't have to do exactly what I'm doing. 3 months down the road, you're probably going to do things a little differently, because you can, whereas I say don't try and force your comfort onto the markets. There is a range of comfort, right, that you can alter with this program, and you're not forcing anything on the markets. You're just altering the approach to maybe be a little bit better fit for what you want to achieve. And I go through all of this stuff, all of different ways of doing, achieving different things in the reports every week, in the webinars. I've got guys who've been doing this since I put it out a few months ago, and they say, just the other day, the last webinar that I held was on Tuesday, and I hold it the second Tuesday of every month. And a guy emails me and says, it never fails. I get a little bit more out of every single thing that you put out on this, the report, the webinar, and that's what I try to do, is just try and increase the efficiency, your understanding, your confidence level, et cetera, et cetera. Randy, do I send SMS messages? No. The signals are at the end of the day, so you have plenty of time to log in and get them. All right, if volatility significantly increases in the coming months, will this program still be viable, or will options be too expensive? Pete, no. The great thing is that you actually have a higher probability in that scenario. in most cases. However, there are instances where an event is what is propping up volatility temporarily. And then once that event occurs, volatility tanks. I mean, just plummets. Then there's more risk. But I talk about this in the lessons, and I warn you in the signals and in the reports. So you'll know to look out for it. How does this differ from risk-free projection weekly report currently available? So this reveals everything within that report. Matter of fact, I don't even make the report available. I don't make the subscription to the RFP weekly report available outside of learning the method. So outside of this program, you cannot subscribe to that anymore. All right, so this is teaching what the report is also doing. Okay, revealing everything about it. Let's see, is it possible to make some kind of installment? Email me, Ryan@quantumcharts.com. John, you are absolutely welcome. What was required capital for each of these trades? It takes less than $200. Okay, as a general rule. And if it's much more, it's not going to be. If it's more, it's not going to be much more. And that's because it's impossible to suffer a $200 risk on most of these trades. Right? Literally impossible. Volatility, the absolute worst case scenario is mathematically impossible to suffer a $200 loss on most of these trades. So they're not going to charge you more. The required capital to make these trades is not going to be more than what the mathematical risk is. And yeah, well, I'll just leave it at that. It takes very little capital to put these on. Steve, I can confirm you're in the 100. Do I get whipsawed on enhancement trades? That's the beauty about this, Pete. The enhancement trades take advantage of whipsaw. It's like I said, this is the most stress-free strategy I have ever traded. And part of it is because it takes advantage of whipsaws. So again, today I'm in a trade, not in RFP, but in another similar approach, but I'm using the same process. And by the way, this process that you're learning, again, you'll be able to apply it to virtually any weekly option spread trade out there to some degree, right? So I do apply this to other similar type approaches. And there's one trade in today. I'm risking about $200, $250 if the market skyrocketed, which it didn't do, and I should break even if the market goes nowhere, right? If I do nothing else on the trade. But the market dropped today about 1.5 points. I enhanced the trade. My enhancement order was filled. It came back up, and another order was filled. And so where I was going to break even and I had $200 of risk, I now have a minimum projected profit of $100 on the trade. And if the market either moves up much more or down much more, that profit potential is around $200 or $250. Unlimited to the upside, but so that gives you an idea. I love whipsaw as long as it's not whipsaw within a 50-point range or a half a point range. Okay. All right, let's see. So those trades lasted 3 days on average. It depends on when they are filled, right? Some of them lasted 2 days, some of them lasted 3 days. There are a couple in there, maybe 4-day trades or 4 or 5 day trades. Okay, not day trades, but day long, 4 or 5 days in length. All right, let's see here. Let's see, in reference to my question, the subscription I purchased is for the risk-free projection course. All right, John, then, yeah, you get the bonuses. Can you place orders before the market opens? Yes. Will there be a need to adjust place intraday markets? No, the need is not there, but if you can, then you can be more efficient. If you can't and the market makes a big move, you'll actually make more money than those who make intraday adjustments, right? So because you didn't make that intraday adjustment. The profit potential on a big move to the upside is unlimited, and the profit potential to the downside is a minimum credit that of whatever it is that is on the trade, and most of the time it's between $300 and $400. And so, so if the market moves down 3 or 4 points during a day, I will have adjusted generally. And if you didn't adjust, you actually will make 2-3 times more than I made, right? So it's not necessary, but you might not have quite as efficient of consistency within weekly profits. So, there might be more weeks where you lose $50 during the week, and I make a little bit of money, right? And then there will be weeks where you might make $400 and I made $75, on the trade, or whatever the case is, right? So hopefully that helps. I have a lot of Australian clients that are involved in this. The webinars, when you log into PDS Trader, you should see the webinars in the weekly report section. And so if you don't see those, contact support. They'll make sure that you get turned on to those. Out of $5,000, how much $200 lots would you trade? You mean how many $200 risks would I take? 1. You start off with 1, and you're not risking $200 on most of these trades. And in fact, in the RFP reports, I have never, I won't say that I won't ever, but you'll certainly know if I ever do, because I'll let you know. But the risks are less than $200. And when you start out, you start off with the minimum trade size. I don't care if you have $500,000 in your account. The smart thing to do is to prove that you can trade it, to prove that you can succeed, and let the money management grow it. The bad thing to do, the dumb thing to do, the ego thing to do, the greedy thing to do would be to start off with a $500,000 account and risk $100,000 on that $500,000 account. Trade that trade size, and then realize that you're making mistakes, or maybe for whatever reason you weren't taking into account something, and so you take a $10,000 loss the first trade, maybe a $10,000 loss the second trade, and all of a sudden now you go from trading that big trade size to, maybe I need to decrease my trade size, and now you're $20,000 in the hole. I see that over and over, not with this program, but when I talk to traders and previous strategies that they've traded from other people and other companies, that's the kind of thing that they've done. You don't ever want to do that, even with this program, okay? That's just the smart way to approach it, and I'm being brutally honest here with that. James, yes, you are. Hang on a second, and I will let y'all know how many are left. Hang on one second. It'll take me here one second. I'll get to another question on why I'm waiting for this to come up. Once the enhancements, there it is. Hang on. 20. Yep, there are still plenty of spots left. You have about 20. There are about 20 spots left, so you're good to go. So yes, James, you are in the 100. Once enhancement trades placed, do trades typically expire or need to be closed? Some of them expire and some of them need to be closed. And again, I would not trade anywhere where they charge you a ticket trade. Anyone charges you a ticket trade, close your account there, go to someone else. IB does not charge a ticket trade, and they're a very low commission, or Tradeer. Okay, so through the PDS Trader website, no commissions, no ticket charge. $50 a month is what they charge, unlimited trading. Will you be able to get to a point where you don't need my signals? Yes. That's the whole point of this entire program. Teach you, let you watch me do it through various means and various different ways, and increase your comfort level. Okay, so hopefully hopefully you can see that I'm trying to provide everything I possibly can to achieve exactly that goal. Because I'm not going to be, so I trade a small hedge fund, and this is what I trade in it. And in 2 years, I probably will revert to that and that alone. I probably will not. So, my goal is to help as many traders get going on this and teach you how to do it, because I'm not going to be providing signals forever. So, absolutely. All right. Any other questions? Let's see, Randy. Yes, I will. Just shoot me an email. All right. Well, it looks like, sure looks like I got all the questions. Okay. So, what is the email to reach you again? Ryan@quantumcharts.com. Ryan@quantumcharts.com. You are welcome. All right. Hopefully I got everybody's questions. Hopefully, again, you found the webinar to be very informative with regard to not only what this program is, but what the realistic expectations are with this to anybody who commits to learn it and trade it. In 30 years of trading, this gives you the best probability, long term, of realizing exponential growth. Let me give you something else on this. Exponential growth is not about consistently growing an account throughout, an entire year, or 2 years, or 3 years, or 4 years, or 5 years even. What I tell everybody, this is the power of money management. This is the power of compounding. And you begin, and as you grow, you may go through a 2 or 3 month growth spurt. Well, the money management is compounding that, and it takes your account to the next level. And then for the next 2 or 3 months, you may tread water, right? Well, because you are following the money management plan, it also has a fail-safe, so that if you start losing money, it begins to protect those profits. All right, and this is all in the course, and in great detail. This is in the money management course, which the money management course alone, which I'm giving to the first 100 for absolutely no cost, is worth more than the cost of this entire program. All right, so but nonetheless, there's a fail-safe within this money management process. So you can increase the account. And let's say you, over the course of 3 months, you increase the account, and then it stalls. Well, as soon as you begin to realize another growth spurt, you're going to start compounding again, right? And then it might stall. And then it might actually start to lose money, right? So now all of a sudden, for whatever reason, it starts to lose money. Well, you've gotten to the point of what I call the point of no return. All right, the point of no return is when you grow the account high enough to where the money management will protect your profits, so that no matter what happens in that strategy, you cannot give back all your profits. And you actually reach that point at a very, very, very quickly with this approach. So it's not that it's not that you have to be immediately successful. It's not that you have to be tremendously successful consistently over a 5-year period and still do well. So, if you do pretty well over the first year and then you don't make another cent for the next 4 years, guess what? You've still, over that entire 5-year period, you've still outperformed every single mutual fund and every single hedge fund out there. That's how powerful this money management program is. All right. I got some more questions here. Yes, this was recorded. It will be available tomorrow. If you're coming in just now, wow, Dwayne, it will be recorded, or it has been recorded. It is recorded, and you'll have access to it first thing in the morning. Alex, I can confirm you are in the first 100. No problem, Dwayne. Tell you what, Dwayne, I gave a very special offer to the first 100 since you could not be here. You let me know. I'll hold your spot. You can watch the video, the recording tomorrow, and I'll hold your spot. You'll see what I'm talking about. You bet. All right. I'm going to go ahead and end that for now. Everybody that's listening, this is your final last chance, unless I said I was going to hold your spot. There's 14 spots now available on the final 100. All right, so that'll give you the final update, and then I'll go ahead and end the night. I appreciate the comment. Thank you very much. You bet. All right, everybody, have a great evening, and again, I hope you found this enjoyable.